welcome everyone. Robert Roy. Hope you're all having a fantastic day. Let's go ahead and make sure you all can hear me. If you would please go ahead and type the number 1 in your chat box, I would greatly appreciate it. Nothing worse than talking to myself for the next 45 minutes, hour or so. There we go. There we go. All right. Fantastic. Okay. So let's go ahead and start off with S&P 500. Let's see where we are at. We're looking at an end-of-day chart as of yesterday. Yesterday's close. Nothing on this as of yet. Let me just start up a drawing tool. Give me a second there so I can draw some lines. All right, there we go. I hit stop. All right, there we go. Let's try it again. So S&P bottomed out in March. Bottomed out in March, which is where we got our V bottom of our Fibonacci. Topped out here in mid-April and has done been back to that line over and over again. There's a 4181, a 4191 is this line right here, and a 4200 level that we're at as well. So right now we are bumping our head at that 4220 level, and we've been there now 5 or 6 days in the last 2 weeks, right? So really powerful resistance that we're sitting at. We got a little bit of a push up this morning in pre-market, 12 or 13 points the last time I checked. So overall, nice pattern. I want to see the S&P as it opens up this morning and get a look there. But we can get a quick sneak inside of what's going on with the S&P by looking at the ES. The ES is the E-mini futures. You can see we closed this vertical line back at 1700, which is where we closed up, right? And we opened back up again then last evening at, here we go, sideways. And then we get down into this big drop off, which this is right around the European Open last night. And then you can see we had some nice movement, but not until about 7:30 this morning did we start to take a move to the upside. Strong, very strong move to the upside on the S&P, right? That long wick was interesting. You always got to wonder if there's someone throwing market orders out there on the ES. Crazy if they are, but especially in the pre-market. But overall, nice move in pre-market. So we're expecting that same continuation to carry through today into the S&P 500. So looking for a continuation to the upside. We're going to look at some bullish positions today of a whole variation from GameStop to MGM to American Express. There's all kinds of great trade setups out there today. Utilizing options. The important thing is just going to be what trade setup will work for you, right? And getting your morning ready and getting your morning prepped is critical, right? You should not be at a point that you're struggling looking for candidates as potentials for today. That already should be done. All right, and there's the market. There's our open. There's the push to the upside on the 5-minute chart on SPX. Now, I normally like to keep this entire platform, this whole system open at once to see. I actually keep this open, the exact window, on 5 different monitors at a time. You don't need 6. It just looks pretty cool when someone else comes over to look at it, right? But it does help that I am not changing symbols over. For us today, we're just going to go and look at the 5-minute candle. Let's see what's going on in there. And what we want to look at is, do we have any resistances that we're going to be contending with right now on the top? So 42.37 quarter. Get a pad so I can write it down because I'll never remember that number. 42.37.25. So let's go ahead and see where we're at. We've got a resistance at 42.37.25, which is a fib line. So let's change that over. All right, so we're not able to see it without a pull down here. So there we go. So we can see now where that resistance is, right? We were very close to it on the open 2 days ago. got close to it yesterday, but not quite before that drop off. And then today we're back in that same realm again of, are we going to push up, bump our head on that major fib line and see some retreat taking place from there, right? That's probably one of the most critical things that could happen to us. There's so much confluence at this area. We had a 42.3260 was our closing high. We had a 42.3804 was our all-time high. And we've got a 42.3725 as a fib. The next one from there, it takes us up to 42.83. So we've got plenty of room. If we can get a breakout here of the 42.37, a bounce, a retest and a bounce would be a perfect storm for me as far as setup, right? What we're looking for. First candle, there's a lot of market orders being filled right now, a lot of contention in the market. Look, I mean, where are we? Right? We made it up. Let's see. It just doesn't like it because I've got the hand still moving it. So let's do it this way. Let's go ahead and just center it on the chart so we could see that line, keep our eye on it better. All right, there we go. So now if I break it down, bring it in a little bit tighter, our high was 42.3695 versus 42.3725. 30 cents away from that high, from that fib line is where we are right now, right? How everything reacts around this is going to be important. Is this going to be a here kitty kitty, a failure point where we fall apart, or is this going to be a breakout where we get this continuation movement for the day from here? But that level is where we have had our resistance over and over and over again, right? Over, right? Day after day after day. For the last 5 or 8 days, we've been in that range. So it's important that we finally get that breakout or fail, either one. But if we're looking for that bullish, the moving averages are going up, the tops are holding, so it's giving us an ascending triangle. We're looking for the break to the upside. Hey, good morning, Rob. Yeah, ding, ding, ding. We're open. There you go. All right. Let's go back and look intraday and see what's happening. All right, so we got the breakout in there. There's 55 seconds left in this candle. Let's see what the rest of this candle does. There are traders that are jumping in right now and saying, all right, I'm in. I'm long. I'm bullish. I bought a call. I bought the stock. And if it moves in your direction, awesome. To me, I would rather allow this to settle, retest and bounce, and that gives me a clear indication that we've got a better chance of the market moving in my direction. I am more of a retest trader than a breakout trader. Do I miss trades? Yeah, about half of what I could have taken. I miss, absolutely. Am I okay with that? Yeah, absolutely. Why? Because I have a better chance of being right in our trade setup. All right, so 15 seconds. Let's see where it goes. All right, I've got 5 left. All right, there we go. So next candle, we're starting to get a little bit of a build from there. So you could take this as it's pushed up above the recent high, take a breakout here, SPY trade as an example. I'm already long on an SPY right now, call option. Or you could wait for the pullback to that 42.3725 level and take it from there, but we're not that far off from it. So I'm okay with that small break to the upside at this point. All right. So overall right now, we're looking bullish. The S&P is up 23. The Dow is up 6. The NASDAQ's up 61. And the Dow is up 247. So very nice. Right? Could we look at SPY? Right? Nice breakout. Same scenario. I want to know where my lines are. Right? I do all my end of day charting on my Omega charts first. Got all my fibs drawn on there, right? So there's the breakout. Same thing. 422.54 is where we were. We're at 424 right now. So good overall move to the upside on SPY. So everything looking great for bullish entries, right? So I want to start off by looking at GameStop, GME. And I know some of y'all freaking out. You're long in GameStop. You bought the stock. You bought the calls. You're going crazy. Let me ask a question of you guys. How far down does GameStop go? What do you think in the next week? How far down does GameStop drop? Drop a number in the chat box. Let me see it. Drop it in. I've already got my number. I know what it is, which I'll share with you. But where do you see GameStop actually dropping to? To what level? Because that's going to be important on what we do as far as a trade setup on here. In the next week? Jay, you think 20 in the next week? So we got 420, 200, 240, 180, 210. Yes, Yogi, AMC is definitely moving along with GameStop. Oh, down 20 points. Got it. Okay, I got it. That's why I clarified, Jay. 220, 228. Okay, so here's the thing. Guys, right now, trying to buy call options, trying to buy the stock, you're setting yourself up for this whipsaw where all the numbers we're putting out there are speculation, right? 250, 280, 230, 240, right? 320. They're all speculation. If we go ahead and take a look at an options chain on GameStop, right? And let's take a look at today, at this week, rather, not today, this week's options. I'm thinking it's Friday already. Wishful thinking, looking for the weekend. So those of you that said, no one really said, Alex had 130. I think there was a 180. The real deal said 190. 140 was LS. So if we look at that 130, 140 range, right, for this week, on a naked put, which basically means that if I sold a put, I am taking on an obligation that somebody could make me buy the stock at $130 per share. There's no value left in it this week for today, right? There's nothing left out there. Market makers have stripped it out after the earnings. It's all gone, right? Prices were jacked up yesterday, jacked up from the setup of earnings. So let's go look at next week. It's okay. If we go down to 140 right now, let's see. Actually, the lowest was Alex. Alex said 130. So let's do 130, okay? If I were to sell right now, and I'm just going to change this over to 1, right? If I were to sell one contract right now of next week's put options on GameStop, they're going to pay me 63 cents per share if I go right at the bid. If I negotiate and try to get that mid price, it's 72 cents. Let's say I get 70 just to make life easy. Right now, well, actually now it's 74 is mid price. But 74 cents. So for every contract I sell, they're going to pay me $74. None of you had it listed that's going lower than $130. If you think GameStop holds above 130, then selling that 130 strike at 63 cents, 74 cents on the mid price is fantastic. Now, I'm not sure how you did your analysis, how you guys came up with it. I'm sure for some it was a guess, some it's a gut feel. Some of you might have been looking at some technical analysis on a chart. And if I go over to mine and look at GameStop, let's take that down for now. You look, we've got major, as far as fib line, a major fib line, this purple line is the 618, which is the most important line on the chart. That's 156, but we've been down a little bit below there. So we've been down to about that 138-ish level, somewhere around there. So I've been looking at the 140s. That's the strike that I chose, right? And look at what has to happen. Our moving averages are all moving in the correct direction, meaning the short term is on top, the midterm is in between, and the long term is on the bottom. They're spreading apart, which once again is great, right? That spreading apart is fantastic. It's strength inside of there. I look down here at ADX. My ADX is screaming. My DMI Plus is screaming. Life is good, man. These are great looking pictures on these setups. I've got to go through 1, 2, 3, 4 fib lines. Not that it cannot do it, but each Fibonacci level, I want you to consider it to be a standard deviation. Most, and I'm not a math geek, guys. I just know a little bit about this because of the market. but most data points fall within about 93 or 96% of all data points fall within that move, right? So we're looking at, in a 2 standard deviation move, we're looking at 2 lines, 1, 2. By the time we get down to 193.5, we've exhausted 93+% of all the data points of movement on average. Now, news, SEC coming out and said, we found something wrong. We're locking the guys up that caused all of this, and we're putting the GameStop people in jail, and we're making the stock go back down to $10 where it belongs, right? Yes, that type of news could drive and cause panic, havoc inside of the stock. But that's not the norm, right? That's not the norm. If we look at that 140, right? And I chose the 130 because it was the lowest strike price that I saw. Someone may put something smaller in. The lowest strike price that I saw in there, right? If we look at the 140, we're looking at 79 cents is on the bid and 85 cents is the mid price. Someone asked, what's the delta? The delta on the 130s is 2. So here's the magic, guys and gals. Here's the magic. Delta tells us for every dollar the stock moves, the option's going to move 2 cents. Okay, big deal. I don't really make anything on that. No, you don't. We make on theta on this, right? My theta on this position is 25 cents, which means every day goes by, the option is going to drop 25 cents in value just because the day went by. I mean, that right there is huge. But there's a much more important reason behind delta. Delta is a probability calculator. It tells us that there is a 2% chance at $130, 2% chance that come next Friday, which is where this expiration is next Friday, which is the 18th, 2% chance that we have intrinsic value in this option. So in essence, it tells you there's a 2% risk of this trade going against you. Now, does that, for some of you, this was a light bulb just went off and went, oh my God, I'm just going to start loading up on this stuff. Hold on a second. Keep in mind what's causing GameStop to move. Keep in mind the absolutely insane implied volatilities, right, on this position right now. So that too might be skewed a little bit, but you're still probably not looking at something more than 10 or 12, even 15 delta. If it was crazy off on this position, you still have a very low risk, a very low chance of this position going against you. When everybody's telling me that they stopped trading GameStop because it's moved too high, it's gone too far, it gets a pullback like it did today, and they start freaking out, this is exactly where I go, right? 140s. I already have put sold for this up. Well, let me back up. I had put sold up for this upcoming week, for this Friday's expiration. I bought them back. I sold them at 75, bought them back at, I want to say 28, I think, bought to close in 2 days, 3 days. I need to write them again. There's nothing out there for this week. We already saw for the 130s for the 11th expiration. We get 6 cents. For the 140s, we get 10 cents. Not worth my time. For the, not on a $300 stock, $280 stock. I'm not interested at all. Yeah, CPI is out at 8:30 in the morning. There you go, Tam. This is a place to be. If you want to learn about options, I am the guy to learn it from, without a doubt. All right. So Vandenberg said, usually what time of the day do you jump in on option contracts? You demonstrated watching the market for the first 5 minutes to get an overall strength of the market. Did I get that right? Normally, I'm waiting that first 5 or 8 minutes to get into the market to just get away from the whipsaw that's out there, right? Just to not be in a position of, holy Christmas, what the heck just happened? And you have these market orders just slap you upside the head. I have had it happen over and over and over again when I did that. I found for me, my risk profile, if I back away a little bit, and I usually am sitting like this at this part of the morning, the first, as market opens, watching, because I can't reach the keyboard, right? I'm sitting like this watching, and then I will come back into this stance and get ready to start trading into the market. All right. So GameStop overall, absolutely loving GameStop right now. I think it's a great setup, guys. That's how I'm trading it for me. And again, I'm already in GameStop, as I am already in AMC. All right. Someone had said they kind of go lockstep. They are, because they're these meme stocks. So you've got to ask yourself the same question. And here, I'm going to ask it now. Where do you see AMC going to by next Friday, by the 18th? Where do you see GameStop going to? Drop it in. Let's see. Do I talk about my stances on certain stocks like cannabis? Yeah, I love cannabis. I think it's a great, it's one of the symbols on my list today is TLRY for you guys. All right, so where do you see it going to? To me, can we stay above that $15 range? Well, yeah, I'm pretty confident we stay above that $15 range, right? So now we've got to see, is there enough? So here we're getting some numbers now. 59, 60, 45, 35, 33, 17 to 23, Alex put down. And we've got higher numbers, 60, 55, 75. There you go. No down, up. I love that we're at the moving average. That's huge to me. We've got enough pullback in here that we should have a fib drawn on this. I'm going to draw up to that high. So now I'm looking at that $15 level. Here we've got 24. The lowest I saw, I might have missed it, but the lowest I saw was 17 to 23, 70, 75. So that was one person. The one before that was about 35. 35 falls in line with this 618 fib line, which is the most important Fibonacci line on the chart, is that 618 on any chart, 0.618. So if we go and look at AMC, a little bit of a push to the upside right there, which is nice. Here we've got AMC, tremendous option chain. Heck, you can get a 50-cent strike price on AMC. So if we go back and look at the 35s, guys, here's the thing. For tomorrow's expiration, I could sell the 35s for tomorrow at 28 or 29 cents for tomorrow. Per contract, right? If I go out to next week and look at the 35s, well, actually, hold on. Let's do it this way. Let's go back and look at that 35 again. That 35 has a delta of 5. What does that tell me? That tells me that 5% chance of being wrong, in other words, of there being intrinsic value in AMC come Friday. Could it drop to 35 by this Friday? Anything could happen, right? Could somebody ring my bell and hand me a bag and says, here's $1 million for the sweepstakes you just won? Sure. What's the likelihood of it? Not very good, right? Could it get to 35? Yes. Is it a high probability? Absolutely not. If we look at next week's 35, we're looking at $2.40 for next week. We've got a delta of 16. So that pushes us up a little bit higher on the delta. But what if we went back to the chart then and said, okay, what if we got away from there about the 35? What if we were looking at 24? Somewhere down below or around that 24, 25 range, what would that do for us? If we go look at a 25, we now have a delta of 4, and we could take in 46 cents. If you're looking at about a 27 or 28, you've got a delta of 6 and 68 cents you're taking in. See, you really have to determine where you think the stock is going to. You could listen to me or anybody else that's on this show or anyone else you know that says it's going here. That's great as a point of reference. You still have to make your own decision and say, I am writing down my number as to where I see the stock going to. I think it goes to here. And you need to plan that trade out accordingly. And when I say where it's going to, where it could go to this week. Because all of this, you do realize none of us, you, me, no one here is controlling how GameStop and AMC works. This is the market. We're not the market. We are just jumping on the coattails of where the market moves. Hence why I want to wait that first 5 minutes and see what happens first before I consider anything in the market. Unless I'm desperate to get into something or manage a trade, it gapped against me and I want to get out. Yeah, I'm not waiting for the 5 minutes. Dong said, isn't premium reduced on puts if the stock is up? Is it better to wait until it's on a downturn? No. So what we're looking at is selling a naked put, sell to open. Selling a naked put is a bullish strategy. So we want to do this when the stock is moving either sideways or up. We don't want to catch a falling knife. You don't want the stock dropping, and that's when you're trying to buy that put option. Remember, you're selling it, so we want the value to go down. And it's not a matter of, is the put right now going down? Here's what you have to look at. If we take that 35, and this was next week or this week? Okay, so this is next week. This is the 18th. All right, let's get to the 35. And let me see if I can't freeze some stuff up on it. Okay, there we go. There's the 35, right? If we look at that 35 right now, we could sell that for mid price. That's the column we're looking at, mid. We could sell it for $2.45. It has a theoretical value of 84 cents. What is that telling you? It's only worth 84 cents in the market maker's eyes from the Black-Scholes model, but they're charging $2.45. Why? Because people will pay it. People will pay it. It's overvalued, so it's not going to stay there forever. We're going to see the options drop as long as the market stays where it is or continues to move higher. See, if you buy a stock, your company, your position must go up to make money. If it goes sideways, you lose money. No, Rob, if I bought it at 20 and it stayed at 20, I don't lose money. Yeah, you do. It's the opportunity cost. You do. In business, you do. If my money is tied up for 2 days, 2 months, 2 years, and I can't use it, I lost the opportunity to invest it somewhere else. If the market goes down, the value of your stock is going to drop. What we're doing right here, if the stock goes up, we make money. If the stock goes sideways, we make money. If the stock goes down a little bit, we make money. See, I like that much better. And they pay me that $2.45 up front. I don't have to wait to make my money after the stock has made its move. I get paid today on that position. Melissa, this is an option that says the stock will be higher. I mean, if you want to buy a call option, you can. I just do not recommend, I don't recommend buying calls on something that has had a move like this. Right? I am a bullish trader. Remember, you could buy to open puts, which means you think it's going down. I could sell to open puts, which means I think it's going up. Or staying sideways, or going down a little bit. See, if I buy the call option, I have to be right direction-wise. It's got to go up. And I have to be right in a certain period of time so time value deterioration doesn't whipsaw me on there, right? And that's where the whole idea behind the option chain of the topic today, of digging into that option chain and saying, how do we look at that option chain and find the right trade for us? It starts off by first looking at the stock, then looking at the option chain, right? Here. Okay, so you want a directional one? Let's look at American Express. What's American Express doing? AXP. Right? So it's kind of flattish, really hasn't made its move up. I would have liked a little bit of move up there. Nucor is another one. NUE. Right? Same thing. It moved up and it's pulled back to the moving average at this point. Right? Both of those. So let's go look at it intraday. AXP. Fat fingers. So we had the gap up and the pullback, right? One of my phrases that I am famous for is look left, right? Get really, really good at looking to the left and determining where you see on an intraday basis, where you see some support, right? Yesterday's low right in here. We had the same thing happen the day before. And not to the exact point, but strong enough. I mean, this gave us a double top pattern that we broke out of, right? There was a hesitation point over here. So a lot of strength in that 163.79. If I am looking at American Express, and let's say that I get the bounce off of there, here's American Express, AXP. I don't need all of the strikes open. I'm going to go find at least 30 days of time. I've got 29. We're good there. So these are weekly options. On TradeStation, they mark them in yellow. At least on 9.5 they do. In 10 they don't. I need an open interest of at least 100. I don't have it. Let's go out to the 36 days, which is a monthly option, and I've got tons of open interest. If I grab the pen, I have a 66 delta. I'm going to spend $6.78 to buy that long option, right? And if we get that bounce off of our Fibonacci level, a moving average, we're looking at 111.34 as resistance. That's where your first target is going to be, is right about that 111 level. All right. Slinging puts and selling covered calls, my favorites. Free Frank, are you doing any diagonals as well? Free Frank also said, I try to exit all my long positions through covered calls. Okay. I always exit out of my positions. It's rare I hold something over a weekend. When you sell a put, do you, whoops. When you sell a put, where to go? When you sell a put, is that order executed immediately because there will be a buyer no matter what? Yes, Sam. So no matter what, the market maker must make a liquid market. So if you're negotiating, it may not happen right away. But if you take it right on the bid or you're buying right on the ask, it should happen right away, unless you've got a very large number of contracts out there. Damn, I think I need more coffee. Okay. Working on spreads. Good, Free Frank. I am a huge fan. If we have time, I'm going to share one with you that I'm in right now on MGM. I've been trading the wheel strategy, so it's better to sell puts when the stock is up. Thanks for the explanation on the premium. Absolutely. Yeah, I call it the wheel of fortune. It just goes round and round and round. How do you, Akil is asking, how do you know the option is overvalued? So when you come to an option chain, you can't see the wording on mine because I have so much on this, on the option chain. But THE, that's theoretical value. So if I look at the price, so if I'm going to buy the 160 calls, let's say, I'm going to buy them at 680, right? The highest price, the one I don't want. I'm going to buy them at 680. If I go to theoretically, they should be selling at 705. What is that telling me? It's undervalued. It's undervalued. It also has a very small theta. For the day going by, I'm going to lose 6 cents. So I don't lose a whole lot of premium at all on the day. So there's a setup on American Express, guys. If you like this, if we can get a small bounce taking place today on American Express, we're just about there. And there's the green candle forming. If you get the bounce, there's the entry trigger. Set your stop somewhere down below that level. And you've got a target already of that next fib level of where you're going to. See, guys, trading is not hard. It's a system. But it gets to the point that you've got to stop using your gut feel of what you think you should do or what your emotions tell you to do. And I know it's hard. It's real money that you've got at risk at times. I know it's hard, right? That's why I share with you things like naked puts, covered calls. I want to look at an iron condor right now on the Russell. If you're not trading this, you are crazy not to be trading this strategy. Nuts. And I actually put together a spreadsheet today. I can usually do it pretty quick in my head. I put together a spreadsheet today to make this very, very, very simple. So Russell 2000, we are looking at a diagonal spread on the rut. Actually, let me do it here. I mean an iron condor on the rut. All right, we got a bad tick in there for today. That's for sure. Let's get rid of today's price. All right, there we go. So you could see we've hung around, right? And I do, you can see where I'm at, guys. I do diagonal spreads on these, iron condors on these all the time, right? Tremendous fan of them, of this. Tremendous fan. So what are we looking for? I am looking for a very simple set of rules. Get out your pencil and get ready to write this stuff down, all right? I don't have them all written out for you. You got to capture the rules. Come back and watch this video again and again and again, guys, to help you with that. I'm looking, it's a little bit early, but I want to set you up because about that 62, 65 days-ish is where I'm looking to be, and that's going to be on this August 21st option, right? August 20th option, 2021. And what we're going to do is we're going to change this over to vertical. Right? That's number one. Changing it over to vertical. I am looking on the mid price of where I can get at least 50 cents, but I need a $10 increment. Not down here, I get 58. Not down here where it's $50 difference. I'm looking for, see, the price has changed, right? I am looking for, on the put side, somewhere that I can get at least 50. When I say at least 50, that doesn't mean go after $1. It means try to get closest to 50, but not lower. In other words, if it was 45 and 60, I'd go after the 60. I would not go after the 45. I need at least 50 cents in this trade to make it worth my while. And these are puts. So what are we looking for? If the stock is here, puts are down below. So if there's more than 150 cents, I want to be as far away as possible. Whatever the lowest one is, that's the one that I want to take advantage of. Right? So where are we? We've got a 1920. That's here. We got 1930 is above it. This one down here. Yeah, I don't want to do that one. We got a 1910. That's down even further. That's 50 cents. So what I'm going to do is I'm going to sell this position. Right? And I'll just do it at one contract. We're going to do it at the mid price, which is 50 cents of credit. Okay? And you're going to sell this option. You're going to set this up to sell just for the day. We never want to leave an order overnight to enter a trade. Just for today, I'll set it up tomorrow if I'm not filled today. And basically, what's happening? I already have my RUT going, guys. We're putting this in a simulated account. So we're going to buy to open the RUT 20th of August, 2021, the 1910 put. And we're going to sell to open the 1920 put. Now I need to write these down, right? On the puts, it's 1910 and 1920, right? Is what we're doing. So we're going to sell one option. We're going to buy protection for the other. We put this in place, right? That order's in. Now we do the same thing on the call side. 2610, 2620. Let's see, it's 50 cents. So where are we? I want to be as far away as I can. Well, the price is at 2,300. So I can sell the 2610, the 2620. All right, I like the 20 better because I get the same premium and I'm further away. So what do? I sell. I'm only going to sell one contract. It's easier math to see in your head. All right, we're taking a 50-cent credit in here, so $50 on this trade. We're going to sell to open the 2620. We're going to buy to open the 2630. All right, that's my protection. That caps my risk in this trade. We put them both in. What was it? 20 and 30, correct? 2620 and 2630. Now, here's what we'll do. Watch. So the current price of the RUT right now is 2328.53. Wrong one, sorry. 2328.53. That's the current price. We're going to sell on the call side. We'll start at the top. We're going to sell, which is that next strike up. Calls, we did 2620 and 2630. So we're going to sell the 2620 and we're going to buy the 2630. On the put side, we did the 1910 and the 1920. So 1920, 1910. What did I just do here? I have a $291 difference with where the current rut price is and where my strike prices are that I'm going to sell. The one I sold, $291 on the call side. On the put side, I have $408. What does that tell me? The market maker is putting a bigger potential chance of movement to the downside, which is why the puts have a bigger number to them. There's more chance of a bigger move down than there is up. But my difference, if you take the 291 and the 408, that's exactly, actually, that's $700. $700 move is what we're looking for. As long as the stock, the rut, stays inside of that range, you get to keep all of it. It's a phenomenal trade setup. Guys, I highly recommend you start practice trading this immediately. Immediately. Yeah, exactly. Enlarge the options screen, please. Yeah, I've got it at full screen, guys. For me, there we go. There you go. Perfect. That's as big as I can get it. If I put it, let's see, I might be able to make a bigger font, but you're going to lose some of the columns if we do. My allergies are killing me today. I'm not really sure from here. I'd have to play with it, guys. I don't remember where the setting is for font on there. Sorry about that. All right. So that's the rut, guys. This, why the August and not the July? So normally I write these out 60 days in advance is when I write the position. So that's why let's go back to the option chain. That's why I'm looking at the August options. There's 70. The weekly options, 50 days. You could do the weeklies. You just get into different realm of some of the weeklies become American style options versus the monthlies are European style options, which cannot be exercised until expiration date. So you just got to be careful that you're not getting played on your numbers here. So many of the weeklies, let's see if we can get them. All right, so they've got a small enough strike in there. You want $10 increments, so we would have to change this out. So let's see if we're looking for a midpoint of 50. Yep, we've got 1995s, 2005s. You could do them. There's only 50 days left on this. I like to do them 60 days out. And by the time they get to 30 to 20 days out, I'm already starting to wind out of that position, and I'm jumping into the next one behind it. But 60 is the normal day that I look for as far as length of time to start. Thanks, Eddie. Fast Eddie said, if you're watching this and it's blurry, increase the resolution of YouTube on your device. Tam said, is there a recommended course for beginning traders? Yeah, Tam. I mean, we have all kinds of beginner stuff that we do, all the way up to the most advanced masterminds and inner circles that we teach as well with our highest level trading students in there. Couple of things, guys. You can go to, guys, can you drop in? There we go. tradewithrob.com/go. Tam, that'll be a place to start as far as free videos that we send out a couple times a week. I've got one already set up for tonight. Assuming that the stock is doing what it looks like it's going to do this morning. I already know which one I'm sending out for this evening. It's a short video of what we do. Every Monday, you'll start getting some emails from us. Every Monday, we do a free training, 1 hour long, called Power Hour on our website. We do it Zoom, we do it YouTube, Facebook, we do all of that. You can get all of that right there. When you place this trade, aren't you worried that IWM is ready? Yes, there is a chance it reverses, but what did we just do here? Right? If we go back, If we go back and we look, let's take this out of vertical. Let's go to single. Watch. Let's go out to the August. And, well, let's do the put since we're on top. 19, 10, 20. All right. We're going to need all. So let's go look at the 1910 and the 1920. We've got a delta of 7 and 8. So my risk, there's an 8% chance the trade is going to go against me. So here's what you will find. If you follow the rules on this trade setup, guys, and there's more to them, right? There's how it manages and so forth. But if you follow the rules along on this trade setup, it's about a 40 to 45% annual is what you do on this trade. You'll have 1 to 2, possibly 3, but that's a rare year when 3 of them go against you. 1 to 2 times a year, you will have this trade go against you. And basically, whatever strike you sold, if the rut makes it to that price, exit out of that trade. So in other words, if the stock drops to the put price that you sold, buy back the put that you sold. Just exit out of that side. Leave the call alone, buy back on the put. That's the management technique. Follow that rule as you've got a 40 to 45% rate of return for the year, and 1 to 2, possibly 3 times the trade goes against you. Now, if you get scared and start pulling out sooner, that's a whole different story. Whole different story. Let's see. Tam said, I followed you on Twitter. Absolutely. I appreciate that. You'll see us on YouTube as well. Kevin said, I learned more in the last 30 minutes than a long time. Appreciate your help. Absolutely. Absolutely. Let's see. Voodoo, hey, how you doing, man? I was waiting for a 60-day on August for the rut. Is it okay to go a bit early? You know, everything adjusts, Voodoo, right? So what does that mean? The delta is adjusted. The strike prices are adjusted based on the amount of time. So it's not that it's a bad thing. I have found my comfort level is that 60-day range personally, especially getting into summertime now. I don't really want to be too much time out in advance. Could you get in now? Yeah, you could. You could. I like the 60 days better. All right, let's see. I mean, there are a lot of questions, guys, that I am sure I did not get to. All right, it's happening. It's frozen. There we go. All right. Yeah, guys, the trade with Rob, we crush it on those trades. I send you out a trade setup. I give you the details of the trade. I give you the entries, the exits. I don't remember if I've got the stops, all of that. Let's see. Yeah, AEE. Let me see. Trying to remember who some of the last ones were that we did. With as many trades as I place in a week, it's hard to keep up with them. Okay, let's see. LMND. Let's take a look at that one. Yeah, but I'm looking for ones that have the lines on them. So sorry. Let's see. Pepsi. All right, there you go. So this trade was done back here. Let's see. So right here is when, so on this day is when we called this trade out on Pepsi. We were looking for a pullback to this 144.96. We had our first target in place at 146.5. Our second target in place at 148.75. What happened? Boom, we ran up, hit our first target, sold half of our trade, moved up our stop. We continued up. Boom, we hit our second target. That's it, done. We got in this trade when the stock's trading at 145, right out of the stock at 148. 2 different exits, quick, easy. Pepsi's not an expensive option, low vols on them. But this is what you get as far as video goes. 3 to 5 minutes long is what the video is. LLY. Who said that? LLY. Frankie said LLY was beautiful. Yeah, just whew, right? Worked phenomenal. Nice pullback as we wanted. Target 1, target 2. This one came out, guys, on let me see. Right in here, pullback and nice move up. I mean, it's recent. You can see where the lines are started. That's how I know. All right. Everything is beautiful there. Where are we at time? All right, good. Perfect. All right, let's go look at a couple others. So as far as I've got a bearish candidate, just don't know with the market being bullish if I want to trade it. JD. Overall, nice bearish pattern, right? On JD.com. Came off the moving averages. I got a moving average cross yesterday of the 8 crossing under the 21. We're looking at 67.36 is target, is our first support. So somewhere up above that, maybe 68 is our target on there. So we've got a lot of opportunity. It's just 70 to 80% of all stocks tend to move in the direction of the S&P 500. So if the S&P is going up, do I want to fight it today? You can. If you're a more experienced trader. As a newer trader, I would say taboo, stay away from this one completely. You don't want to do anything to do with this, right? Here, TLRY. I am loving TLRY. I'm a big fan of TLRY. I've traded for a long time now. Just not not at the $300 range. Right? That was crazy when it first came out. But TLRY has an opportunity as, for me, a covered call or a naked put. So if I come over to my option chain, let's go here first. Get TLRY. Now, we've fallen off the end of day yesterday, down a little bit today, but we're still above this 1964 level. So I'm okay. Right? If I can find a decent option on TLRY, and I don't need all of these, if I can get a decent option on TLRY, let's see what we can do. Stocks trading at 2092. Normally, guys, this is a normal option for me for a naked put. I'm looking for about a 20 delta on a position that I'm going to sell a naked put on. So for me to pick up 21 cents on the 20, it's got a 25 delta, and that's for tomorrow. So we're a little bit tight on timing, but it's not bad. If I were looking out here at the same for next week, I'm selling the 18.5 and I'm getting 43 cents. So I'm going $1.50 further out of the money and I'm picking up double. Now you're adding more time. So that's the reason for it. You're getting more time. You're moving further away as far as strike prices go. If you're looking at this to go long with the stock, then this is what I'd be looking to do. I would be looking at a covered call. 21.5 would be the strike price that I'd be looking to sell right now today for this week. And this is what I'm going to do. I'm going to go here and I'm going to sell a covered married stock. And let's just do one. All right. I'm going to buy to open. Wrong trade. Sorry. Did it on the wrong strike. So where are we here? We're looking at, let's cover married position. All right. So let's do 100 shares. So we're going to sell 100 shares. Why is it not clicking in right here? So we got the 40 delta. I'm doing sell. Okay. We're going to get rid of the 5, go down to 1. It's buy. I was clicking sell by mistake. I'm thinking naked put. So we're going to buy 100 and sell the $21.50 call for $20.42. If somebody, so that's $2,042 to do this trade. If somebody decides to take this away from me, meaning the stock moved up above 21.5, let's say it goes to 21.75, 22 to make it easy number in our head. Someone could buy it for me at 21.5. Well, I paid 20.5 for it. So I've got $1, about 5% on this for one more day, tomorrow. Folks, I love this setup, right? It's a great opportunity into a covered call. It's a great opportunity into a covered call. So Vandenberg said, when buying calls, what do you look for to choose the ideal strike price and expiration date? Please walk us through your thought process and how you look for the info. Yeah, I like the naked puts, Justin, but if someone wanted to go covered call, I just wanted to lay that out here as well, right? That you can do this with the call side instead. I'm always a fan. Listen, guys, it's very simple. Wheel of Fortune says we sell a put, they make us buy the stock, we write the covered call, they take the stock away, we sell a put, they make us buy the stock, we write the covered call, they take the stock away, we sell the put. It's Wheel of Fortune. It just goes round and round and round, right? Or some refer to as the wheel strategy. All right. I think you go naked put first. So Justin, I'm with you. All right. So, all right. How do we find the ideal strike on an option chain? It all depends what your trade setup is. See, there is no, I'm going to do a naked put. I'm going to sell a covered call. I'm going to do a diagonal. I'm going to do a vertical spread. I'm going to buy call, buy put. There is no ideal for all. It's not every one of them. This is the strike we would do. If we are a directional trader and we are day trading, I am trading the shortest possible options on this chain, which means today's options. Today's options. Let's say we're looking at TLRY. We want to buy an option. We're day traders, and we want to buy an option on TLRY. Beautiful. What does that mean? A day trading. I'm bullish. I want to buy a call. Okay. So we come here, scroll down, find a 65 to 85 delta. Look left. Make sure the open interest is at least 100. And I'm going to take whatever's closest to 65. Not lower than. It's got to be above for me. So the 20. So I would buy the $20 strike if I were bullish on TLRY. Now, I don't normally day trade a TLRY. It doesn't have a big enough move for me. But if you want to take that in a different direction, and let's look at Netflix. We go here on Netflix. Oh, man. Look at that. Beautiful. Our setup has done amazing on Netflix. Woo! All right. So we have a bearish trade on Netflix. We entered at 493.5. We did 4 contracts at 493.5. And we did that on June 7th. All right. Our first target was 488.5, so 489.5. So if I plug the numbers in, just 49.5, 489.5, we're up $624 on that trade so far. We're out of half of the trade. We basically have made this trade, barring a gap, we've made this trade impossible to lose money at this point. Impossible to lose money, right, on this setup. Now, we only did 4 contracts. It was an aggressive trade. We're going against the market direction, right? Our next target is down here at 479.5. What happens if we get to that 479.5? Takes us to $1,700 if we move down to that next level. And in our last contract, we manage manually using a proprietary exit system that we have. So Netflix, just the one I happen to grab, right? I just love seeing that it's made that move down. So if we look at Netflix, I'm bearish. I want to buy a put. If I'm day trading Netflix for today, Come find the delta that's 65 to 85, 66. It has 697 open interest. We're looking at buying the option at 485, and it's got a fair value of 488. Guess what? They're not ripping me off. Go ahead and click buy. I always trade off mid price. I don't trade off ask unless I have to get in. You go to just one contract, right? That would be your order. Buy to open one Netflix, the June 11, 2021, the 47.5 put at $4.55, limit order for the day. Right? That's the way you look at an option chain. Again, I already have an open trade on Netflix. That's the way you look at an option chain to determine what's the right strike and so forth. If I am not day trading, but swing trading. If I am swing trading in here, and I think we got to go, guys. If I am swing trading, I am looking at least 30 days of time. Same rules. All right. Mitch, you there? Spencer?
I'm here, my man.
Hey, how you doing? Sorry, I know you wanted me to finish up, and I've just realized.
No, that's quite all right. We're off to a late start on our next show anyway, so I was not gonna interrupt your flow. You were zoning, you were vibing. So I was like, I'm just gonna sit back and watch and listen as I do. Guys, great stuff from Robert as always. If you liked it, do us a favor, give us a like. Takes 2 seconds. I mean, that comment about learning more in a half hour than in whatever the time frame was before that is, I feel that way every time, my man. Robert drops great knowledge. What do you think of the new time slot, Robert?
Oh, I love it.
Awesome.
I absolutely love it.
Awesome.
I'm gonna share this over here, Spencer.
Yeah, what do you got?
Guys, I don't know if I can make it bigger. This is that Trade with Rob is in there, but more importantly is I don't have a download yet for that spreadsheet. I literally put that together this morning for you guys to calculate the Komusakama, the Iron Condor. If you want a copy of this, you just need to send us an email at support@wealthbuildershq.com. Put in there RUT spreadsheet.
All right.
Don't just send an email with nothing in it because you'll get nothing back. Put an email that says RUT spreadsheet, and we will go ahead and send you a copy of that spreadsheet out. Next week, I'll have a download for it that we can use.
All right, there's the link to Wealth Builders HQ. 2 links. They're both in the description. I want to say that as well. They're literally in the description of the video. You shouldn't have to just do anything. Just scroll down, and they're there. And if they're not, whatever. But there's a link to one, the link to the other, right there on the bottom there, tradewithrob.com. Guys, Robert Roy is going to join us every Thursday at 9:25 and do pretty much this exact same thing, right? Just do this every time and walk you through the open and talk through setups. Again, different style than what we have Monday through Wednesday, and that's great because there's 10,000 ways to do this thing. So, guys, show Robert love. Show Robert love. Hit the like button. Hit subscribe. Robert Roy is from Wealth Builders HQ. And he's dropped knowledge, and we appreciate it. And as always, Robert, thanks a lot, man. Good luck for the rest of your day.
Thanks. Appreciate it, guys. Take care. Bye.
All right, guys. It's 10:30. I am waiting very patiently, I might add, for the next show to start with Sandy Monroe. Guys, if you don't know Sandy Monroe, if you're into cars, you probably know Sandy Monroe, right? He is one of, if not the foremost expert in automobiles, in EVs, and I'm told they're starting imminently, so I'm just going to hang out until then. This guy has been in the industry for decades. It literally has taken apart cars on his live streams before and said what sucks about them and what's good about them. So I just was told they'll be on in 2 minutes. I'm going to hang out until they're ready to go, and then we're going to just go. This is, again, I said this before. This is going to be interesting. You're going to want to tune in because this is the very first time we're doing a live stream from a remote location. This is not from Benzinga's office. This is not at anyone's house. This is from Sandy's office, Monroe and Associates in Auburn Hills, Michigan. This guy's live streams do thousands and thousands and thousands of viewers because people who are into cars know that this guy knows what he's talking about. So we're going to talk about Ford. That's where he started his career at. We're going to talk about Tesla. He was a Tesla hater for a long time. He's come around finally. And we're going to talk about one of the SPACs, actually, that one of these EV companies that went public via SPAC that he likes. You're going to have to stay tuned to find out what that is, though, because there we go. Okay. It is 10:31. Wow. I'm told that I'm watching them in my queue here. I see they're just about ready. It says it's going live. So this stream is going to redirect, guys. You shouldn't have to do anything. Just redirect. Maybe have your autoplay turned on. But this is going to end, and it's going to redirect straight to Sandy Monroe. Jason Raznick's probably going to go for, I don't know, 30, 40 minutes, and then we'll get SPAC's attack. They also have a big guest today at 11 o'clock. We got a lot going on today on the stream between Robert Roy, between Sandy Monroe, between SPAC's attack. This morning block we're in a fast market, everyone. So let's just take a second while they are about to start. Hold on, I'm getting a phone call right now. This is Rohan. I'm gonna. All right, Rohan. All right. I'm on the stream. You can go, man. Sure, I can do that for you. All right. I'm wrapping up right now. All right. All right. That was Rohan saying it's good to go. I'm going to wrap up the stream, guys. I'll see you over for Sandy Monroe live with Jason Raznick on the Raz Report.